Alright, traders, a very good afternoon to you all. This is Avel from the Tradepsyche, and I welcome you all to the post market analysis, outlook, and expectations from the market for tomorrow, for the next week. Right, and in this video, we'll discuss that how the markets were in the last week, how the markets were on Friday, and how the markets essentially can be in the next week or on Monday. Right, we'll discuss the opening on the Monday, that how the opening can be, and we'll also discuss some of the crucial levels for the whole next week, whether we will be we might be super bullish or we might be super bearish. All right, so let's start with the discussion. So as usual, right, we how we do is we discuss the domestic or the from the global perspective, if there are any positive or negative news. But strangely this time there is no positive, there is no negative news, even from the Trump perspective, because what used to happen is um, Trump has a habit of announcing negative things on weekends, basically, which used to destroy the Monday morning for the people who are in a habit to carry, who are swing or positional traders, right? Or not even if his mood is good, that if his mood is good, then he won't announce anything negative. He might announce anything positive, but as of now, nothing positive, nothing negative has come from his side. I think if nothing negative has come, it is positive for the markets only. Right, and many, I think, results have come in ICICI Bank, HDFC Bank, IndusInd Bank on the weekends, right? And even the Reliance result has come in on the weekend, right? Just I think after the Fridays the markets closed on Friday, and I think Friday's evening, or maybe I think around 9 or 10 o'clock, the Reliance results came in. And before even starting the technical discussion, right, from the fundamental perspective, both Reliance results and HDFC Bank results are decent. I will not say that they are good or they are very good, but they are decent. Keeping this into consideration, that what is the global perspective going on? The US and the Europe both are in almost recession, so we can expect the slowdown to reflect in Indian companies also, because they have a good business in exporting. Reliance exports the oil to chemical services. Its domestic business is Geo1, but Reliance exports its oil to chemical business. We import crude oil from Russia and other nations, and make chemicals or refined product of it, and we export it. So naturally, when there is recession globally in Europe, US, which wherever we have major customers, so naturally it will impact the Indian business also, Indian export business. Coming to the banking services are totally dependent upon the domestic demand, right? And even the HDFC Bank results, right, they came in decent, not too bad, not too good, they came in decent. All right, so from overall perspective, there is nothing too much negative in the world, but there is nothing too much positive also, right? The markets on Monday will open factoring many big results, which will be HDFC Bank, ICICI Bank. I think even no Axis Bank results came in, I think, Thursday or Friday. It has been factored, but Reliance, these three big major companies will factor their results, and it will be very interesting to see that how the market reacts on Monday morning, because as per if you see GIFT Nifty is almost showing, if even if you see, right, let us go to the chart of GIFT Nifty, and GIFT Nifty is showing a big breakout, right? If you can see here, GIFT Nifty is showing a big breakout. So almost roughly 160 to 180 points GIFT Nifty is showing, means if the markets are at 25,700, we can expect the markets to open at 850 or 900. That's the situation as per now, what we are seeing. But we are not sure when the markets will open, when GIFT Nifty will open on 6:30 a.m. Monday morning, what factors it will take into consideration, whether it will remain green, whether it will go more green, or whether it will correct. That is a very subjective situation, but as far as, if you look now, as far as things, if you take the question of now, things look comfortable to me. All right, so let's start the technical discussion. I'll probably what I'll do is I'll remove all these levels, and we'll straight go to first 5 minutes and discuss like what happened on Friday. All right, so I'll take you back to the daily chart, and what was our last discussion is, we have a we had a resistive trend line coming from the upside, and we had a supportive trend line coming from the downside. This was our last discussion. Let us go back to the hourly time frame wherein this actual breakout has happened. So whenever naturally, let's suppose this is from the price action perspective, whenever the prices are in a triangle, right, like this, the prices, they they squeeze out, right? So whenever this breakout happens, each and every time, I think out of 10 cases, 8 cases, it comes back to the retest of this trend line and then again go up, right? This is multiple, I have seen this multiple times, many a times, and I'm sure that this will happen once again. So as we were discussing that we will see a breakout or breakdown, if we would have seen a breakdown from this point, the breakdown would have like this, retest and then continuation. Same can happen for the upside also. And if you are watching my videos from long time, you might be knowing that we were discussing this from a long perspective, long time, that this breakout will gonna happen. We were not sure that whether it's gonna happen on the downside, whether the breakdown is gonna come, or whether the breakout is gonna come. But we were sure that somewhere the markets will go, because the markets, if you see, they were in a squeezed pattern. So it was a perfect probability that markets would have come down also from here. But the positive news started coming in that India's trade deal uh, is going to be successful, right? And the bigger positive news is Trump on Friday night. I forgot to mention this is a positive news. Trump on Friday announced that he thinks that China, the tariffs he put on China, 100% tariffs he put on China is not fair. He is gonna substantially bring down the tariffs. So seeing that, the perspective we had on Friday's close, I think around 3 o'clock or 2:30 p.m., every global market was in, deep red territory. The US market, the Europe markets, they were in deep cuts. Every index was 1.5, 2% down. And seeing that, we anticipated that yes, the Monday in India also we might see a gap down. But he came in at 7 o'clock, 7:38 p.m. as per the Indian time, and he announced that he thinks that the tariffs on China he applied are unfair and he might roll them back, which was taken very positively from the global markets. The Dow Jones and the S&P index, from negative 1% they rose to almost 500 600 per Dow Jones, and almost S&P almost rose about 50 to 60 points, although they closed flat. But yes, it is a very major thing that a index which is 1.5% down, it is recovered and it came and closed in green, which also made the GIFT Nifty very bullish. Earlier, GIFT Nifty was showing roughly around 60-70 points gap up, but post that news, GIFT Nifty also shot up and it is now showing 160-180 points gap up. Right. So now, what is the scenario? This all has happened and this was our discussion. What is the scenario for the coming weeks? All right. So from weekly perspective, I'm not seeing any bearishness in the market, and there's no need to be any bearish. There's no need to become bearish unless and until you see a sign. And what the signs are? The signs are like this: any red candle on weekly time frame or any weekly closing below the prior weekly low, right? And in my last video, right, I technically pointed out this price action. Whenever a big red candle forms, but a pin bar green candle forms like this, it is highly probable that the next candle will cover this whole green red candlestick. And I'll make you guys see last time when this price action formed. If you can see at this place, exactly, a big breakdown on the weekly time frame happened, but a small pin kind of green candlestick formed, and the next, I think how many? 1, 2, 3, 4, 5, 6, 7 weeks continuously markets were in a bullish trajectory. And markets took support from weekly 5 EMA. Exactly. So now, where is the market? Unless and until we see a closing, if you are a moving average perspective follower, if you are a guy who follows the moving average system, don't short the market unless and until we see a red closing below weekly 5 EMA, which is this level. Of course, whenever the markets will go up, the weekly 5 EMA will also go up. But the moment you see any weekly closing below it like this, then and only go ahead and short the market, because it is a clear cut price action that whenever this price action happens, the markets they keep on running until we get a negative closing on the weekly time frame, and then the next candle might also be a red candle, right? But if you see, the gap ups and gap down plays a major role in the market. If you see this red candle was basically a negative candle which closed, okay, it was not able to close below prior weekly low. That's why the markets were able to turn around fine, right? So now we follow a system of prior of closing of the candlestick, closing our prior weekly high, closing below prior weekly low. So this candlestick we saw a close below above prior weekly high, and we anticipated that the moment we will cross the prior weekly high, we will get a good momentum. Same will be the case now also. And if you see from this perspective, right now markets technically, this I discussed in my I think last to last weekly analysis. This was a bearish pole and flag pattern, and its target, if you see, essentially its target can come like this till I think 29,000. Its target is coming. And why 29,000? In Because even if you see this trend line, right, which is coming from this perspective, this will roughly meet the market at this point. Not this much perfect. I'll take this trend line. Yes, this now perfectly fits in the picture. The target for this pole and flag breakout, the pole and flag breakout, I hope you guys are aware of this pole and flag breakout pattern. If at all this breakout happens from this point, how many points should be covered? Like whatever the range of this is, you can exactly mark this as your target. So this is what exactly it's happening. But since it's the game of probabilities, when this price action will fail, it will fail if at all. Currently it is yet to break out. I'll show you the perfect price action. Okay, it has broken out. My bad, it has broken out. The failure of this will come when this prior weekly low will be breached and close on the downside, right? So my targets for this for Nifty, for this bullish pole and flag pattern are 29,000, and even this is suggested by this trend line which is coming from the upside. Sorry, not this one, the prior high and this high, right? And you can even consider this as a W pattern also. So there are many patterns, but this is a kind of a distorted W. And if you remove this part, this is a technically, this is a bullish pole and flag pattern. So there are no bearish signs as of now in the market. Don't even think to short the market. If you are long into the market, please keep trailing your stop loss unless and until we close below prior weekly low. All right, so I'll mark you the levels, which the level which you have to take care the next week, which is basically 25,780. Above 25,780, the first level which you will see is 26,000. But there is a catch and there is a turning point in the markets now. When I say yes, there is a bullish pole and flag pattern, but there is also a double top coming in the markets ahead at 26,250 or prior all time high. And from my experience into the markets, right, whenever the markets are in a good upgoing trajectory and it breaks down the trend and it again tries to reach that point, it is not easy to break this resistance. To break this resistance, two things needs to happen: whether the market should consolidate at this point of time for 3 to 4 weeks, build the momentum, and then fly off like a rocket like this, or the markets should take a resistance here, form a base roughly around here somewhat like, and then should go up. I have never seen a price action wherein the prior point is a top in the market of a major top in a market. So this 26,300 was a major top in the market, if you guys see. All right, so it will not be very easy, it will be very difficult to break out this point 26,300. So how we can deal this point? Just mark this as your level, To be very precise, 26 to 80 is the level. What my calculation says is, seeing the bubble scenario even in Indian equities, the bears, they will try to come back at this point of time. There are two probabilities here. Either we can go till here, sustain here, and then break out in a healthy way. The second probability is either we can go till this point and take a sharp downturn, which will be the breakdown of this M pattern. This is probability number second. Probability number third, we see a breakout at this point of time, which will be a kind of a false breakout, because generally such strong resistances, they do not break and the markets will come back down, crashing. Again the markets will form a base, and then again markets will go up. This is the third probability. So from my perspective, the highest probability is the markets reaching this level, sustaining at this point of time, and breaking out. This is the highest probability which can happen. But we have to be, as traders and investors, for investors it does not matter that much, but I make videos for the traders. As traders, you have to be very very cautious when the markets come near this level, and the markets for sure will come near this level in the next week or next to next week. All right, even this was a good resistance, but on Friday, in the momentum, and on, I think, Monday, markets will be opening roughly around 26,000. So 26,000 first resistance is a very big psychological number. So from my perspective, above this one, 26,000 will easily come, and you will not get to trade this move because it will happen in a gap up. The second strategy, the second probability is, if the markets, they try to show you a negative price action here. What will be the negative price action? I'll talk to you about that, because it will happen on Monday, Tuesday, Wednesday. It can happen any day, and we cannot wait for the whole week to close down on till next Friday, the coming Friday, to get a confirmation. How we will get to know that we are forming a negative price action at this point of time? See, in last number of times when this has happened, even at this point of time, the 2020 market crash, if you see this pattern, the markets rough, technically markets crossed over the prior high, and what negative price action came in? A closing below prior weekly low, this candle, this red candle, right? So this is also not a perfect kind of a double top. A perfect double top on weekly time frame, I don't see anywhere happening in the Indian markets as of now. Either we see a, you know double top whose right shoulder is down like this, is lower than the left shoulder. Either we see this kind of pattern, but I do not see in the markets a perfect double top. So if the bears want to come back, this is the perfect spot for them to come back here and short the markets heavily. But we will not short the markets blindly. How we will short? We will find signs for the negative momentum at this point of time. We might find a sign on the weekly time frame, we might see the sign on the daily time frame or hourly time frame. That is a separate thing. But if the markets are showing us a sign, but nonetheless we have to be very vigilant and very alert that what the markets are doing at this level. Because from my experience, if the market, let's suppose, if this is a major top in the market, and the market was in a bullish trajectory, and the market has topped out from this point, so again if the markets are reaching this point, the markets cannot, in one instant they cannot break this out. If it happens, it will be a false breakout and it will come crashing down hard, just like this price action. So the moment I say that it will come crashing down hard is this point of time, exactly this point of time. This was a major market top. The markets, it even sustained at this point of time for, I think, multiple weeks, but still we cannot consider this as a good place to be in for the longs. Even if the markets, they cross this point of time, this level, and you see the markets roughly at around 27,000, 27,500, exit your longs at this point of time. If you are able to catch this straight run, wait for a pullback. If this level 26,300 is held It means it has formed a base, or it has formed a good support at this point of time, and then again go for a bullish trade, right? I hope I'm making you guys clear, but we'll definitely go on daily time frame and we'll see that what will be the pattern. So for you now, the crucial level will be 26,780. Above it, first level which you can see is 26,000. Above 26,000, 26 to 80. Above 26 to 80, if the markets they go in a single direction, 27,000 might come in 2 or 3 days, because then it will be an aggressive short covering from the FIIs. But beyond 27,000, I don't see the markets going. At least at 27,000, markets will take a pause or a good retrace back, right? When you will have to go short, the first sign is, as always, our price action says, the 50% retracement of this candlestick. The 50% retracement of this candlestick level is 25,450. Simple. This is the 50% retracement, and what the 50 percentage retracement candlestick rule says, that if the prices are traversing back the 50 percentage of this green candle, we have a high probability that we might go till the full 100% retracement. All right. So if at all, anytime you see the prices in Nifty coming below 25,500, it will be the first weakness sign, and below 25,440 you can short the market still 25,000, right? So for swing and positional traders, long about 25,780 till 26,300, but exit at 26,300. For swing or positional bearish traders, swing bearish traders, look out for this level 25,440. If we are breaking 25,440 on the downside, then there is a high probability that we might retest 25,000. The range for the next week, looking at the VIX, the range for the next week is 26,000 and 25,000. 1,000 point range I'm keeping. Either the candlestick which can form is like this, or either we can form a negative candlestick if at all we go past this, because we'll open somewhere around here, and if at all we see a red candlestick like this, we might form a negative candle. All right. There is very less probability of forming an inside candle. Why? Because the VIX is not going down, the VIX is going up. It means the markets are planning to go more volatile. So it means the more the VIX increases, the bigger the candle forms on the weekly time frame. All right, guys. I hope this price action is clear to you guys. Let's go to daily time frame. Sorry, I'll take this out. All right. Now, from daily perspective, as I am already mentioning that the markets have broken out this trend line, so that technically the markets should once come back to retrace, and Monday's gap up will make the markets very overheated. So we what happened, this we will discuss on 15 minutes time frame, that how to trade on the basis of a very good gap up or gap down. But if at all the markets are going up like this, 26,000 is a perfect point of time where the markets can take a retest back till 25,880, or markets can take a roll back till this trend line level and then again go back up. Fine. So from daily perspective, this level, this range will be a no trading zone for you. No trades will be punched in this zone, which will be 25,500 and 25,780. Basically, this 250 points, this 250 points, the markets will not do anything. The markets will simply go up and down and keep trapping the traders and or eating the premium decay if you are an option buyer. So this will be a no trading range for you guys. Below 25,440 from daily perspective, the first level will come as 25,250. Above, I think upper levels I'm sure about. Let's straight go to 15 minutes time frame and discuss that on the basis of opening, how we can trade the markets. All right. Now on the basis of opening, right, looking at the current gift nifty situation, we are seeing a roughly 160 to 180 points gap up, which will make us open roughly somewhere around here. If at all we are opening a very big gap up, fresh longs, it is strictly unadvised. See what happens whenever the markets open with a big gap down. The markets for first 15 to 20 minutes it go more up, but it forms a day high. The same way, whenever we open a big gap down, the markets form a day low and it tries to recover the gap, and if the markets are still bearish, it will again come down. So the same thing will happen in the gap up also. If the markets are opening a gap up, it might go somewhere around like this in the first 25 to 30 minutes, but it will form a day high and it will start to cool down. The cool down level will be prior day closing. So this will be the level prior day high basically. So this will be the level till which the markets can close the gap and start going bullish up again on this trajectory. So if at all the markets are opening a very big gap up, you have to stay away from the market. Do not initiate any fresh longs until the day top has been formed and we are again breaching that day top. Alright. If at all we are opening a very big gap down, then I think the markets can be still on rise. If at all we see a very big gap down, because this is a strong bullish trend, first of all you will get some demand here. If at all you are opening somewhere around here, some trapped shorts will exit, which will make market a little bit go up, and there will be a high demand in this range since most of the players have missed this bullish rally. So even if we are opening a big gap down, I don't see negative day tomorrow. If at all we are opening a gap down, either the markets can get stabilized. Okay, one more thing, now I remember. Tuesday the markets are closed. So Tuesday, Tuesday's Nifty expiry will happen tomorrow only. So this is a very tricky part now, and we will observe the premiums because Nifty's expiry is gonna come. We'll observe the premiums, that what the premiums are saying, and whether can tomorrow be a trending market or a sideways market. But since tomorrow is an expiry day, we have to treat it a little bit differently. If the markets are opening a gap up and premiums are decayed post the opening of gap up, the markets will expire in this range. That's it. If the markets are opening gap down, we might see a trending move because it is an expiry. All these expiry bulls will get captured and then we might see a trending down because it will trigger put unwinding. Put writing it will put writing will get unwinded, and that can create a negative downtrend markets. So in this uh, trajectory, in this bullish journey, now tomorrow Monday, if at all we are opening a gap down, then tomorrow can be a sell and rise day. Why I changed my strategy? Because tomorrow is an expiry. If tomorrow would have not been an expiry, I would have kept my stance the same, right? So it all totally depends upon the premiums, that what the premium says, but I have made you aware. Overall, if you ask me that how are the markets for the next week, I don't see any bearishness. I see comfortably the markets going till 26,300. If at all any bearish momentum has to come, it will come below 25,500 only and only. Unless and until we close a daily candlestick below 25,550, don't try to short the markets unnecessarily. Right? Let's go to Nifty Bank and what has Nifty Bank done. Already we had discussed Nifty Bank, that Nifty Bank, if at all it tries to break the level of this 56,500, or I think 56,000, this was the level which we were discussing. If Bank Nifty tries to break out, in my last weekly analysis video also and last weekly analysis video also, my stance for Bank Nifty was bullish only, and I was anticipating a target of all time high, and Bank Nifty technically breached again an all time high. So what is the next target for Bank Nifty? So if you analyze going on a longer time frame, if you analyze, we have a resistive trend line coming from the upside. Sorry, this is a continuous. I'll make a trend line. Yes. So the next target for us in Bank Nifty is this point, and it might do a trajectory like this. It might do a trajectory like this. It depends that how much time it takes, but this will be the upper resistive trend line, and post that resistive trend line, the markets can top out. right? So what will be the strategy? The level in bank nifty which you have to take care of is 57 880. Above 57 880, 58,000 is an easy move, but above 58,000, 59,000 and 60,000 will be an easy move for bank nifty. Bearish when you have to go only and only below 57,000, because 57,000 is the 50 percentage and also a psychological number. So bearish trades only will come below 57,000. Below 57,000 we can go till 56,300 and 56,000, but below 56,000 bank nifty will be heavy bearish. 55,000, 54,000 and 53,000. That's it. All right. If you go on daily time frame, I don't see any negativity here, but the same thing, markets have technically completed this W pattern, and markets now will go in an exhaustive territory from where we can see a sharp pullback on the downside, right? And bank nifty is ultimate famous for these sharp pullbacks on the downside after hitting all time high, just like this. And sharp rallies end up in a sharp fall also. So we next week we might have to be a little bit careful also. If at all we are seeing a continuous bullish momentum, at the second half of the week we'll start booking our longs in the market and wait for a better opportunity. Let's discuss their OI data also, what their OI data says, and the change in OI data and total open interest. Alright, traders. Alright, so here is the option chain, and from the perspective of 20th September, 20th October expiry, if at all you see, there is a heavy resistance at 25,800, and on Friday the resistance got added only at 25,800. So these will feel trapped. If this is smart money, these people will feel trapped, because till 750 also the OI got added, and there was very less bullish OI getting added at 700 or 750, because the markets are closing at 25,700, right? So this gap up which will happen, it will trap many call sellers, many bears. Now on Monday morning the decision has to be taken by them, either they want to add more positions or they want to exit. If you look at the premiums are not less. The straddle premium at the money, because the markets will open at roughly around 25,800. So this will come around 100 and this will also come around 100. 900, sorry. So this will come around 120 and this will also come around 1. This will also come around 100. So when the markets will be opening, the premiums will be very high. You have to keep a very close watch on the premiums. If the premiums are not decaying till 11:30, then second half can be another round of short covering in the market, which can take the markets essentially from 850,900 to 626,000, 100, right? So the premiums are not less, even though IV is less, but the premiums are not less. So we can expect, if the premiums are not decaying, we can expect that yes, a trending momentum has to come. As per now, even if you look at the premium of 25,700, the premiums are not bad. So we can expect a trending momentum in the markets tomorrow, not a sideways expiry. Right? If at all now you want to see the change in OI, the change in OI is okay. I thought the change in OI should be very bullish, but it is not. Generally, in very bullish cases, what happens is the okay, more number of calls have been added, more number of bearish positions got added on Friday. Strange. So now OI data paints a different picture to me, right? All right. So the biggest support which got added at 25, which got added is at 25,700. So as per my anticipation now, I'll tell you one thing from looking at the OI data, right? And let me once have a look at the total open interest. 800 we got addition, 900 and 26,000 we got huge additions. Right. So the players, the big money, they were not at all anticipating that Trump will come and say something very bullish. These people, they were into the impression that the markets will not on Monday will not go beyond 25,800. And since Tuesday and Wednesday are market holidays, they want to take full. Uh, okay, fine. So as per my anticipation, right, the change in OI does not look at all bullish to me. The change in OI is slightly bearish because if you can clearly see the bearish positions are 1.8 CR and the bullish positions are at 1.17 CR. Since it will be a big gap up opening, this data does not matter that much. The data which gets built after 1 hour of the markets, live markets, that will be very much important. But as per from the current scenario, it looks like the market should not go beyond 25,900 unless and until these bears start to run away. So we might open 160, 150 points up, which is roughly 850, 860. But 25,900 will be a crucial point in the markets. So mark 25,900 also. If at all you are crossing 25,900, 26,000 will be attained. If you look at open interest, 25,700, 25,800, sorry, 800 also has very good bearish OI, and 900 also has a good very bearish OI. But tomorrow, right, I don't see markets going beyond 26,000. That is for sure. It's a big, very big, huge OI. If this OI gets unwinded, I think tomorrow itself 26,500 can come. But seeing the VIX index at 11, I don't see that happening at all. If this had this if this has to happen, tomorrow VIX has to go till 13, 14, which is roughly not possible, right? Let's go to Bank Nifty. What is the change in Bank Nifty? Yes, in Bank Nifty the change in OI is very bullish. Almost 10 lakh of additions of longs and only 3 lakh addition of shorts. Total open interest, PCR is still on the bearish side, so I think there is a lot of move which has to happen in Bank Nifty on the upside. So for Bank Nifty, 57,000 above 57,000, we can easily see 57,500 and 58,000. That's it. So OI data analysis for Bank Nifty is bullish, and for Nifty it is slightly bearish to flat, right? Everything depends upon the opening and what do we do after opening. But as per my analysis, seeing the data, we should not go beyond 25,900, max to max 26,000. This is a very high probability that we will expire below 26,000 tomorrow. Very high probabilistic thing. Let's go to the different sectors. First, we'll go to IT, the weekly time frame. IT started to bottom out. We saw a good weekly closing prior, like last to last week, but last week we saw a, it's not a bearish closing because we have not closed below prior weekly low, but it's kind of profit booking. So the crucial level for the markets for Nifty IT to go bullish is 35,800. Above 35,800 markets can easily do 37,000 and then 40,000. Simple. But if at all we start to go below the 50 percentage, which is 34,700 or 34,600, we might see a big breakdown in Bank Nifty. So the Nifty IT. So the stance in Nifty IT is on hold unless and until this green candlestick range is taken out on any side. Nifty Auto. Nifty Auto is in a clear up trajectory. What we did here in Nifty Auto is we reached the all-time high. We took a very good resistance. We formed a I think red candlestick, and now we have closed a very good bullish candlestick. So Nifty Auto is poised for buy on dips. So keep a buy on dips scenario for Nifty Auto. For metals, metals are taking a pause at prior highs, prior all-time highs. If metals are able to break out this, then metals will see another very good bullish trajectory in the market. So stance on Nifty metal is hold unless and until we cross this level on the upside. All right. Nifty mid caps, they look in a bullish trajectory, but this candlestick is a little bit weak from my perspective. All right. Interesting. Now this is very interesting part. I'll make you guys see. Nifty has closed a bullish candlestick above prior daily high, but mid caps has closed. So this is saying to me that this rise in Nifty is a fake one. See, I'll tell you from this perspective. Keep apart the technicals part. Keep apart the everything. Whenever this kind of thing happens in the market, right? That the market, see, understand the markets from derivatives perspective, because every time I say the markets are ruled by the derivatives market, the Nifty 50 or the index, the biggest index of the country, it is ruled by the derivatives in the short term. So if an index is rapidly being taken up without the contribution from mid caps and small caps, and even IT showed a negative candle. IT showed a negative candle. Metals showed a pause. Mid caps, let us see what small caps have done. Small cap 50, weak candlestick, same. So only using bank nifty they are taking nifty up, which is dangerous. Why? Because the concentration of the markets are increasing, and whenever this happens, right, the markets are heading in a bubble territory. But what is a bubble? A bubble is something when only few indexes or only few things or stocks they go up and they take the market up. Same thing is happening in the US markets. If you are seeing the US markets on all-time high, it is just because of the 7 to 10 stocks which hold the 70 percentage of the market cap. So this is not at all good. Even though you are seeing the markets, you are seeing the Nifty 50 in green, but if I am seeing Nifty mid cap on the red side, it is a sign of worry for me. So you can play this very smartly. I'll tell you guys one thing. If you want to play Nifty right, play sell on rise scenario for Nifty mid cap and play a pause scenario for Nifty 50. If at all Nifty mid cap breaches 21,720, we will be poised for 630, 560, 500, and below 21,500 it will be a meltdown till 21,000 in mid cap. Alright, getting my point? But this will have a positive turnaround above 21,800, above 21,850 you can consider, because this is the 50 percentage retracement, right? But above this, if at all, yes, I am saying that this rise in the Nifty 50 is fake one, but it can get converted into a real one when mid caps and small caps, if at all they start contributing to the rise in Nifty. If not, then this is a fake rise, and this is just being used by FIIs, because see what is happening in the markets. I'll tell you, FIIs had record number of shorts, and if they want to dump the markets in a hard way now, they first have to clear their ongoing shorts, or they have to roll over their shorts to November expiry. For that, they have to take the markets up, roll over the shorts, and then in November starting, short the Nifty 50 around 26,000, 26,300 at exactly the double top. That is my theory. That is what the markets are telling me as of now. All right. So a clearer picture comes into the market when I see OI data and when I see other indexes also. Right. So this was the complete analysis, guys, from my perspective. If you want to hear a summarized now, because we have done the OI analysis, we have done the multi-sector analysis. To sum up, right, what I feel is the rise in the Nifty 50 is just being done to wipe off the current or ongoing shorts, the heavy shorts FIs had in the market. They want liquidity, they want to short more, they want to dump more stocks. That's why they are taking the markets up, and that's why they are only taking the stocks which are required to take the Nifty up. If the markets they actually had strength, they are actually bullish, mid caps and small caps would have outperformed. Even IT had outperformed, even auto had outperformed. IT made a negative weekly candlestick, auto made a pause candlestick, metal made a pause candlestick. So when the major sectors are not running, only the bank Nifty is running, only the banks are running, then it is a dangerous situation. Till the moment the Nifty is rising, Nifty will rise, but the moment it will hit a good supply zone, it might come faster than the way it has gone up. So it is my disclaimer to the traders, not to the investors. Investors still has a long time to exit the market, but it is my caution to traders that if at all you are planning to take bullish trades, be very vigilant and be very tight in your stop loss. If at all you are breaking prior 2 hour or 3 hour candlestick low, then you have to exit your longs or you have to take a very good hedge. Don't go aggressive bullish or aggressive bearish in the markets as of now. We'll go aggressive bearish when we close below prior weekly low, but the current scenario, right, when the other indexes, small caps, mid caps, IT, metal, auto, when they are not contributing, only Nifty Bank is contributing. It means the moment Nifty Bank will take resistance, the whole of the market will come down. Getting my point? I have given you all the levels. I have given you the raw, complete analysis of what the markets are looking like. Stay safe in the market. Stay vigilant in the markets. The markets are very tricky at this point of time. It is not an easy market to trade. If at all you flout your rules, if at all you forget your trading rules, you will be the one to pay the price with your capital. Nobody else. Alright. Cheers, traders. Stay safe in the market. Good afternoon.